Yes, good evening, everyone. सब कुछ है तो और क्या चाहिए, right? So that's the question. Uh, I would say two broad things. One, the fundamental fabric of any economy is two things. I can jargonize it, but I'll say more people working smarter, labor force participation and productivity gains. India has both those things going in the favor. If you looked at all the previous big rallies, say Japan circa 85, you would see that one of the two element was missing, right? India, 20 crore new working age population gets added the next 2 decades. Secondly, the productivity gains is just about starting. Everything else that's happening around it, your fundamental GDP growth will largely be good for the next 15, 20 years. There is no other sort of country outside of India which is such a large sort of consumption market, a well-oiled democracy, expectable judiciary, and as I said, a consumption market. So that way, if the fundamental fabric is good, the third element that you need is flows. Paisa bahar nahi ja sakta, right? If you are resident Indian, you can send 250K a year. You are an NRI, you can send $1 million a year, but that's about it. The percentage of household savings coming to equities in India last year was 5.6%. We have topped $60 billion. Developed markets, most of them are above 20, US is 43. Right? Incrementally, if real estate is not that big an attraction, and you pencil in a 10% number, you're talking about $150 billion in India in the next few years. 12 lakh crores per year on an equity size of 50 lakh crores. Right? So if you don't make very big mistakes, you will do good for 10 years. And I think if you have that sort of cushion, comfort, or netting, then I think that is in and of itself a very big deal to have.
Thanks for that. Jigar, you want to say something on the sectors? Sorry. Let me just, no, I just remember something else. We were discussing, and Sindhi is one community. My wife is a Gujarati, and I'm a middle class Maharashtrian. So that's where I learned to collect money, count money, save money, and not spend money. But Jigar, I'm hoping that you're a good Jew. Yeah. So once I sat through Jigar's presentation with the clients that we had, and it was enthralling. It was enthralling the way he had control over the numbers and the way he spoke with the conviction. So you have a core and satellite approach, and that has given massive risk-adjusted returns in the last so many years. And I think your money is also growing in, and a lot of them are sitting with their checkbooks outside. So what do you look forward to 2026, and anything that you want to add also on exit strategy? When do you exit a stock?
Right. So see, our style is sort of Amit very well articulated here. Our style is sort of starts from the other direction. We think choosing the right sector is more important than choosing the right stock. Obviously, there is like even if the goal is one, there are several sort of ways in which you can approach that. For example, between 2008 and 2010, the worst performing FMCG stock still was better than the best performing real estate stock. Right? These are extreme examples, but I think choosing the sector comes before choosing the right stocks. To that end, at least at Buoyant, what we do is there are times when we are super aggressive, like post-COVID, post-Russia-Ukraine, we were 63% small caps. And then by 2021 or like by September 24, we were almost on the other direction. So, getting in and out of the market, I don't think really is a choice, at least in a market like India. And I'll give you sort of, and I think different versions of this have been played out in different panels. But if you were an investor in the past 25 years, top 10 days have driven 57% of index returns. And top 30 days have driven 87% of index returns. So, if you get in and out of the market, you will most likely miss out on one or all of those days. You will develop sort of feelings of missing out, and then we'll get in at the wrong time again. So there are times when we are super aggressive, times when we are very much defensive, trying to protect the downside. But for us, at least the sector selection trumps the stock selection. 2026, I think two or three factors with which we were working over last year, the tariff related issues. I think there is an emerging consensus. I was on a panel with a former ambassador just last week, and then the common belief I was led to believe is that it will get resolved in the next 2 or 3 months, if not sooner. But I think the policy level shifts in India are not really well appreciated. So capex at the state and center level was pulling India's GDP higher, right? States were growing 30% plus, state center PSU was growing 25% plus, and sort of that was pulling India's GDP. We did the analysis of the past 17 states that went into elections recently, and their announced freebie bill is higher than their capex bill. Thankfully, they've provided only half of what they've announced, but that still meant that capex is down. Center has also pushed capex out. Schedule 7 constitution, center can spend only on three parts: national highways, national railways, and defense. Everything else is a state or a concurrent subject. So if both those capexes are going down, then you have two implications. One, your potential GDP growth is curtailed, right? Capex is 2.5 times RevX in terms of impact on GDP. And secondly, it takes time to transition, which is very well apparent in the quarterly numbers that you are seeing. That plus sort of RBI mismanaged September, October 24. Next year, I think all of those parameters are solving. Tariff related issue is solving. At the margin, quarterly profitability is getting solved. I would say flows, are at the domestic side will more or less remain good. But even at the FI side, see, India had a very unique situation where rupee depreciated against a depreciating dollar, right? The DXY index fell from 110 to 98, and rupee went from 83 to 89. That I think at the adjustment level, the REER level is now even. So I think the confluence of events are getting together. I would be sectoral wise a lot more focused on discretionary, a lot more focused on pharmaceuticals, but trying to get as far away from capex and heavy capex sector as possible.
So you're saying you're not really sector agnostic. You go in the sector first, then you go into the stock.
So sector agnostic in a sense, most sectors do. Like we are happy to go anywhere where we find there is value. But in India, predominant investment philosophy is, choosing the right company, right management, and building it up from the bottom. We slightly come from the other direction.
Thank you so much. I just remembered something because there are still some people on the phone. I had met a client 2 hours drive from Surat who had given us 450 crores. And he had lunch with us for 45 minutes without his phone. He said, जब meeting में जाते हो phone छोड़ के जाना. So when you're spending time here with so many gurus giving you GAN, keep your phone away. That's my request. Elevator speech, anybody?
For Buoyant, so difficult to pitch it, but
sales is a difficult job, I'm telling you.
That's why he said sales makes more money than fund management. No, so okay. So all right. So if you look at just the CAGR, Buoyant would be sort of a top quartile fund, 1, 2, 3, 5, and 7 years. But we have achieved that having sort of maintained beta of the portfolio at 1 time or less. On a 5-year rolling return, we would be at 96% consistency on a daily rolling. And we have executed this sort of following a strategy, which at least I think is entirely different vis-a-vis others. And more importantly, we do it by having a single strategy framework, right? So lots of PMSs, AIFs in India, I would think about 400. But ones that are of size, say more than $1 billion or so, I can think of only 2 who run a single strategy, right? And Buoyant obviously is one of them. And more importantly, there is almost 100% skin in the game. So 3 of us, our spouses, and Buoyant's treasury money is all invested into the Buoyant fund. And that is our attempt at completely aligning ourselves with the end investors.
That's fantastic. Give a round of applause, please. Any other? Thank you so much. I think time is up. I had 2 more questions to do on rapid fire, but I think it's fine. I think thank you so much. And I got a lot of gyan from you guys, and I will now go and buy some stocks. But you please catch them on the way out and take some photos and ask for some tips. But thank you so much.